altcoins are at the top of a move, right? For the past 40 or so days, they've been in impulse, like Bitcoin, and they've been, for the past 2 weeks or so, in some sort of consolidation. Question is this consolidation the same as Bitcoin's consolidation, i.e., is it likely a distributive move, right? A distribution, a move that's going to eventually result in a downtrend? Or are we likely looking at a reaccumulation, i.e., a consolidation that will continue the overall trend that we've experienced for the past 40 days? That's the question, and I'm going to tell you why it's likely the latter. Hello everyone, my name's Dean, let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 25th, 2023. And it is a very exciting time for crypto enthusiasts, investors, analysts, only because altcoins are ready to rage. Altcoins are ready to rage. Bitcoin may go up a little further, but the story and the interest and all the attention and most of the capital is going to rush into altcoins, and I'm going to tell you why that is on this episode. If that interests you, then watch until the very end. Guys, I hope you're having a great day. Let's start with Bitcoin as usual. Bitcoin, our analysis has not changed. Our analysis has been that what we've seen in Bitcoin for the past 40 days is essentially a completed Elliott wave impulse to the upside, right? We broke this resistance with this wave, right? This long-standing 300-day resistance or 250-day, however long-standing resistance, broken to the upside with 1, 2, 3, 4, 5 waves, right? Quintessential Elliott waves, wave 1, 2, 3, 4, and 5. Wave 1 and 2 are pretty much the same amount of time. Wave 2 coming between the 0.5 and the 618 of wave 1. Wave 3 being 1618 to 2 Fibonacci extensions of wave 1, retracement of wave 2. Wave 4 being a complex flat correction, and then wave 5 being one last push up. Okay, so we think that this, by our analysis, is completed. And then the subsequent consolidation really tells us that it's likely that this is coming down, and as we said before, back down to the $31,000 level. Nothing's changed about that. So let's zoom in on the 4-hourly time frame, and you can see I've got this this red box to designate our distribution range. Okay, again, a range that's a distribution range is a range that's looking to break down. Okay, as opposed to an accumulation range that breaks up. My Wyckoff people will know this. So it's likely because our previous impulse or trend or our likely impulse to the upside was broken right there with this move, which is what we call an initial break of structure. And so everything after that is likely a subsequent subsequent consolidation and sort of a part and parcel of the same distribution. Okay, so we're getting some consolidation here, and we have been in consolidation for the past 16-17 days, I believe. Let's see, maybe it's longer. Let's check. No, yeah, 16-17 days, going up and down and up and down. And essentially what I can expect with a high degree of probability from Bitcoin is that it continued to test the tops of this range. Okay, it may make a move to 39, 40k even, but it will still be subsumed in this distributive range. Okay, and if you look at your Wyckoff accumulation, Wyckoff distribution schematics, you'll see we have what we call a spring. A spring is a test of the higher parts, or sorry, a test of the extremity of the range, opposite to the direction it's eventually going to go. So for an accumulation, the spring tests the lower limits of the range before springing up, and for distribution it's the opposite, right? It would be right here, our range, and then the price testing the upper limits, right? Any more buyers, any more buyers, any more buyers, and then the sellers step in, okay? And that would be your spring in Wyckoff theory, okay? So this is why it's important to study these things, because it's very practical when you're looking at the chart and people are saying, well, look, on this really small time frame, Bitcoin looks bullish, and Bitcoin does look bullish on the very small time frame. But if you zoom out just a little bit, you understand that the context of that bullishness is not bullish at all, because you're in and have been for the past 2 weeks in a range that you don't seem to be breaking out of, right? It doesn't seem bullish at all, especially if you consider the fact that you've made, doji candles, right? Basically, you're trying and trying and trying to break the upper limits, but every single time you get to a certain point, sellers step in, sellers step in, sellers step in, and they don't just step in a little bit. Look, and this is why really reading charts and reading price action is so useful, and making sense of it is so useful. One, the doji candle is basically the big wick to the upside. That means sellers quickly stepped in within that same time frame of the that chart, right? So if it's a 4-hourly chart, that means within those 4 hours that it went up, it came down just as quickly and retraced completely upon that rise. Okay, that's what you get here. So that's basically at this level. For some reason, sellers stepped in quickly. You can see also, although you don't have a doji candle here, sellers stepped in a major way. And what you really want to pay attention to is the nature of the retracement. If you're going up and then coming down just a little bit, the selling pressure isn't very strong. The initial move up is still withheld, so you're showing strength actually, because this is a minor retracement. But what you're getting here in these cases is retracements that are beyond the phi ratio, beyond 618, beyond 50%, right? You're retracing almost 100% of whatever gains you're making in trying to break this upper resistance. Again, you go up, you get to this level, sellers step in, retrace almost 100%. So this should really alert you, if you're a buyer, if you're bullish, right, to caution. That should make you cautious. Not saying that you don't get these interwave consolidations, right, in a trend where you consolidate and you go up and down, up and down, up and down, and you do see that on a smaller time frame, but then eventually you break up and out, and then you just do it again, right? This is different. And the reason it's different is because, again, as we said, you've broken the uptrend with the retracement beyond the phi ratio, as Elliott Wave tells us. Any legitimate impulse does not retrace beyond the 0.618 Fibonacci retracements of the previous uptrend. Okay, that's how you know there's nothing sort of continuative, is that a word? There's nothing sort of progressive about this move, okay? And you know that you're essentially in distribution. And also, last thing, if you look at this uptrend right here, it's choppy. It's choppy. When you see what we just illustrated here, a trend and then a consolidation, right? Meaning accumulation, and then a trend, reaccumulation. Then you go back into the trend. You see the trend is strong. It shows strength. Here, you didn't show strength. You really, really had trouble chopping up, okay? That doesn't bode well. Because if you look just very quickly at what the trend looked like when it was in action, right? You come up, you go down for your consolidation, accumulation, whatever. You show strength. You come back, you show strength, right? You show strength once you eventually break up and out of that consolidation or that reaccumulation, whatever you want to call it. This isn't it. Okay, that's essentially telling us, using sort of indices of, the verve and the candlesticks, that you're stuck in here, and eventually you lose complete steam. Buyers completely lose hope, sellers completely take over, and you go into impulse to the downside, and our target once again is $31,000. So that's Bitcoin. That's what's been happening for the past 16 days, and then for the past 40 days if you count the impulse. Okay, now Bitcoin is important to understand because the market moves as Bitcoin moves, generally speaking. But there are times where, when Bitcoin is going sideways and, just doing some consolidation, altcoins are in catch-up mode. Altcoins will step in. These times are likely near. This is why my focus is on altcoins right now, not Bitcoin. One, because Bitcoin is likely in distribution. Two, because altcoins are likely to outpace Bitcoin in the coming days. So let's look at altcoins. Guys, if you're getting value, please like, share, and subscribe. So altcoins, just to put in context, what we're seeing in altcoins with what we just did in Bitcoin's analysis. So same time frame, okay, and same ideas, okay. Altcoins are at the top of a move, right? For the past 40 or so days, they've been in impulse, like Bitcoin, and they've been, for the past 2 weeks or so, in some sort of consolidation. Question is this consolidation the same as Bitcoin's consolidation, i.e., is it likely a distributive move, right? A distribution, a move that's going to eventually result in a downtrend? Or are we likely looking at a reaccumulation, i.e., a consolidation that will continue the overall trend that we've experienced for the past 40 days? That's the question, and I'm going to tell you why it's likely the latter. Okay, so again, same time frame, kind of same things, but we're going to likely have a different result. So for the past 40 days, as I said, you can see that Bitcoin, if you pay attention, has gone up about 40%. That's big for Bitcoin. 40% in 40 days, right? So you can see that 40%, right, in the past 40 days, right? Now, in the past 40 days, altcoins in the aggregate, if you look at the total 2, which is the chart that I'm pulling up now, for those of you who don't know, the total 2 is all the altcoins, all the non-Bitcoin assets in crypto put together and put in one chart. So it gives us a decent idea of what altcoins are doing generally. It's a nice it's a nice indicator of what altcoins are doing. Again, past 40 days, right? Altcoins have gone up how much? Well, if you count, it's not as much as Bitcoin. It is only about 30%. Now, does that make sense? This is why it doesn't make sense, and this is why you should expect more from this impulse to the upside in altcoins, right? Because think about it. Bitcoin is the largest market cap cryptocurrency. If it moves, it generally moves less than altcoins in a given move, okay? It may initiate the move, and altcoins may be slower to then effectuate that move, but eventually altcoins are going to gain much more than Bitcoin, and this is natural. They're more risky, they're lower market cap, so they move more, okay? They move more to the upside and to the downside, i.e., if we're in an uptrend, Bitcoin does a 2x, altcoins may do a 10x. If we're in a downtrend, Bitcoin goes down 50%, altcoins may go down 90%, okay? Or 100%, maybe, not 100%, 98% or something like that. Do you see what I mean? So the idea that in the same period of time, we've had uptrends in altcoins, uptrends in Bitcoin, but Bitcoin is outperforming altcoins. If it's a real impulse, you should expect altcoins to eventually outperform Bitcoin, i.e., you shouldn't expect this trend to be finished. And like we said in Bitcoin, and I'm just going to reiterate this quick fact, you can cleanly count 5 Elliott waves, impulse waves, in Bitcoin's price action in the past 40 days. Wave 1, 2, 3, 4, 5. Okay, and I explained exactly how you count waves and why. If you measure using Fibonacci retracement, everything fits. It's very likely, high degree of probability, that is a complete Elliott wave impulse. Not so for altcoins. You cannot do the same on the altcoin chart. If you were to try to do the same thing, the closest you could get to a nice clean count in the altcoins, and I'm going to drop down in the 4-hourly time frame so we can see a little more detail. The closest you could get is something like this. Wave 1, 2. This is wave 3. I do not see wave 3 having yet ended. I do not see wave 3 having yet ended, because if you measure the distance, right, between, and this is a little tricky if you're not used to counting waves, but I'll tell you how I quickly reached this conclusion. If I take wave 1 and wave 2, right, which this likely is, those are the easiest things to spot in Elliott wave impulse, right? Wave 1 and 2, why are they the easiest? Because they typically take the same amount of time. So you can time them, and then wave 2 comes between 382 and 618 Fibonacci retracements of wave 1, and you can measure them, and they're in the beginning. So that's how I always start counting my Elliott waves in impulse. Start and identify wave 1 and wave 2. How do you attain, how do you attain your level for wave 3? Typically, wave 3 comes to a measurement of wave 1, retracement of wave 2, then 1618 Fibonacci extensions of wave 1, retracement of wave 2. This, if you did this for this this altcoin sort of Elliott wave, what you would get is this. See, wave 1, retracement of wave 2. You already get wave, let's say wave 3. Let's say you count wave 3 to end here. This is the next significant resistance. You're already at 2236 Fibonacci extensions. Wave 3 typically only comes to between 1618 and 2 Fibonacci extensions of wave 1, retracement of wave 2. So very easily, very quickly, my conclusions from that are that I'm still in wave 3. And so we're dealing with a wave 3 extension. And this is typical in very bullish assets. Wave 3 is typically the longest Elliott wave, and it's typically the fastest. And so once you get wave 3 extensions, it's hard to count because it extends many which ways, okay? The typical Elliott wave counting is done using, an average sort of measure of, like I said, most wave 3s coming between 1618 wave 2, 1618 and 2 Fibonacci extensions of wave 1, retracement of wave 2. If it's extended, then you're going to have a lot of issues trying to count. But if you know it's extended, what could help you is not taking profit too early and expecting strength, expecting a bigger move. And from what I'm seeing on this chart, it's telling me that whatever we're seeing here, unlike in Bitcoin, for the past 2 weeks, this is not a distribution waiting to come down. Rather, this is a reaccumulation. This is an intra-wave correction whereby we go up, correct, go up, correct, go up, correct, go up, right? I don't know about this. I'm just saying, like, this is one of those, I'm correcting, but then I'm going to pump, okay? And back to my previous point, when we looked, now let's zoom in. Just like we did with Bitcoin, we zoomed in, right, on the 4-hourly time frame, I believe. And we talked about how if you're looking at this 2-week range, okay, that Bitcoin and altcoins have been in, right? It's accumulation, or sorry, it should tell you, just looking at the candlesticks, it should tell you the nature of what's likely to come. All right, none of this is 100%, but you're making educated guesses based off of price action. Price action tells a story, you just have to be able to read it. And if you can read it properly, you can make a decent amount of money. You can, high degree of probability, prognosticate the next likely move, okay? So in Bitcoin, we saw doji candles on the top, okay? Don't see any doji candles here. I did say in Bitcoin, what gave me cause to pause to say we're likely breaking up and out of this range and, you know, shattering 38K is that the retracement every time we got to a certain level was swift and extreme, meaning retracing about 100%. We're getting the same thing here, but a big difference is you're likely to get that in any flat correction, okay? But the difference is you don't have those quick turnarounds. Like once you get to this level, price doesn't say, get me out of here. It's just we're gonna hang out. Okay, now we're gonna go down. We're gonna hang out. Okay, now we're gonna go down. We're gonna hang out. Okay, you're showing strength. Another reason you're showing strength is once you're likely WXY or WXYXZ, however you want to count it, once your likely retracement has ended, you're now showing strength, right? You're showing significant strength coming up and out, which you should expect if you're likely breaking up, okay? Look at this right here. This is our likely impulse up and out of this range. And then let's go back to Bitcoin on the same time frame. 4-hourly, right? Guys, if you're getting value, please like, share, and subscribe. I think this is fun. This is why I do it, and I've been doing it for a decent amount of time. Now look at this right here. To the untrained eye, you're going to be like, Dean, it's the same fucking thing. It isn't. Look at this. Look at the doji candles. Look at the nature of, I get here, I retrace. It's a struggle getting up and through this channel, okay? There are some strong candles. This is a strong candle. This is a strong candle. But there's a lot of struggle, a lot of retracement, a lot of chop. This is chop, okay? This is not what you want to see in a move showing strength. Now let's go back to altcoins. Look at the difference, okay? You had, I want you to pay attention to the midpoint, right? When I talk about channels all the time on this channel, I talk about 3 main aspects. The bottom, which is support, the top is resistance, and the midline, which is support when you're above it, resistance when you're below it. Every single level has to be respected and retested, and that is exactly what you expect in a channel, any channel. What do you see here? Strength through the midline. Strength up and through the midline. And obviously you get to the top, you get a little bit of consolidation, but you don't get wholesale retracement like you did in Bitcoin. It's subtle. It is subtle. I grant you that. But there's a big difference between a distributive channel and a reaccumulation channel. To the trained eye, if you're looking at these things enough, you notice the difference. You notice the struggle at the midline. You notice the struggle where you hit the top and you retrace a decent amount. And you go up and you retrace again. the retracements are plentiful, and you do get quick reactions at resistance resulting in doji candles, whereas if you look at the altcoins, you're not getting as many doji candles at resistance, okay? And when you do, the retracements are minimal, okay? Look at this minimal retracement. You go up, minimal retracement. This shows strength, generally speaking. I understand it's subtle. I understand it's not like, Dean, what are you talking about? That's like, there's no big difference. But, I mean, that's the difference. There's a little, there are big differences, right? Obviously, because one's likely to break down and another's likely to break up. And it may be subtle at first, but, what you want to do is use a confluence of factors to make up your mind and decide what's likely happening, okay? So both the idea that wave 3 is extended in the altcoins and the idea that this resulting impulse actually shows strength tells me that altcoins on a higher time frame are looking to finally break this 500-day level of resistance to the upside. And again, for Bitcoin, the difference is this long-standing channel of resistance, or accumulation rather, that price action has been in, has already been broken, and all Bitcoin's doing is retracing and retesting it, as we should expect, because 500 days of resistance has to be retested as support, right? Now, altcoins are just a step behind. If you look at Bitcoin, it's a step ahead. That's all that is, right? So you can really make this more simple, right? 250 days of accumulation right here, broken to the upside, retested as support. Previous resistance, long-standing resistance, retested as support. In this case, it's 250 days. In altcoins case, it's 500 days. And both instances, you're doing a 618 retest. What does that mean? That means you're doing a retest that would further cement, further confirm the veracity of this move being a tried and true Elliott wave impulse. Because remember, Elliott wave impulses do not retrace beyond 618 Fibonacci retracement levels. And so if indeed we had to retest this 300-day resistance as support, it would only require us coming back down to the golden pocket between the 0.5 and the 618 Fibonacci retracement level of this previous move to the upside, okay? Same thing for altcoins, okay? And this, I thought a lot about this, and I have to, because if I'm going to make my investments, I got to give myself a really good reason why I think that altcoins are going to break to $1 trillion while Bitcoin's just going to hover around 38 to 40K. I need to make a good case for that investment, for that move. And a lot of people are going to miss it because they're going to say, well, Bitcoin is likely to retrace. So by extension, altcoins are going to do the same thing. That would be missing something. It's a little more subtle than that. Usually you can get away with that, but not all the time. Also, they'd also be missing the idea that Bitcoin's essentially doing what altcoin's doing, but it's a step ahead. So, like I said, 500 days or long-standing resistance, Bitcoin broke to the upside. Altcoins have yet to do that. Now it's altcoin's turn to break that high time frame resistance to the upside, hit that next major resistance, and then come back and do a 618 retest, further confirming this previous move as a tried and true impulse. Does that make sense? This is why I see altcoins to $1 trillion. This is why I'm really excited about altcoins making a big move in the coming days, where Bitcoin may not necessarily do much other than retest the tops or continually test the tops of its range, okay? And the last thing we can look at for this is Bitcoin dominance, okay? Bitcoin dominance is a measure of how strong Bitcoin is versus the rest of the market, right? Versus altcoins. If Bitcoin dominance is going up, that means it's obliterating altcoins. Altcoins are losing value against Bitcoin, meaning Bitcoin's going up and altcoins are going up less, or Bitcoin's going down and altcoins are going down more. So when Bitcoin dominance is going down, you know that altcoins are gaining against Bitcoin. And what you can see on the chart here is we're likely getting a move to the downside in Bitcoin dominance. And that's exactly what you should expect if indeed altcoins are going to rocket to $1 trillion, where Bitcoin is going to continually hover in that red distribution range, okay? And so you can see that on the chart here. If you pay attention to this price action has shown you that there's a level of resistance here, right? Resistance, and you've tried it. You've come up, you've tried it once, you've tried it twice. Will you try it again? Maybe, but before trying it again, what's likely to happen is you're likely to come back down to this level of support, right? And maybe you try it again, maybe you don't. Maybe you eventually just break this channel. But that's the idea. We should expect in the coming days Bitcoin dominance to continue to the downside. When we turn on our stochastic RSI momentum indicators, we can see on the daily time frame that indeed Bitcoin dominance is overbought, meaning it's looking to make a move back down to reset this momentum, right, all the way back to the downside. So this is consistent with what we're reading in this little channel here of price action. Does that make sense? So Bitcoin dominance is basically confirming our reads on what Bitcoin's likely to do in the coming days and what altcoins are likely to do. And this is why I'm positioning myself in altcoins right now, and I wouldn't consider a serious trade in Bitcoin to the upside, because that upside potential is limited, to say the least. I would also watch out for the coming full moon. We know that full moons generally represent local market bottoms, okay? So if we do eventually get a move to the upside, maybe this weekend, maybe in the coming days, the next full moon, which is on the 27th, do expect that to represent a bottom, a local market bottom. And so if that's on the 27th, which is Monday, I believe, and we do move between now and tomorrow, right, do expect a quick retracement so that on the 27th or around the 27th, we have some sort of local market bottom. So yeah, that's all the theory and, using the total 2 chart and all that stuff. But at the end of the day, what you want to do is pull up a chart of your favorite altcoins, of whatever you're trading, and really concretize all of this information, make it make sense for what you're trading, right? So that, okay, you look at that chart and you say, okay, this is likely to happen based off of what I'm seeing. So we're going to do that for a couple of examples. Let's start off with ADA or Cardano, okay? And Cardano's one chart that, let's clean it up here. Yeah, no, this is fine. So this is a very nice altcoin chart. It's representative of what you've been seeing in the past few hundred days. A lot of downside chop, right? We have this descending channel that finally ended right here, and then we started going more orthogonally, okay? And we went into this sideways channel, and for the past 40 days, we're in a strong move to the upside. Question is this strong move to the upside going to continue to the top, right, and hit the next likely resistance, or is it going to distribute and come back down? Again, just like we did with our previous analysis, we want to look at the price action. We want to look at the nature of the candles. Okay, and we again don't see a clear wave 3. Okay, because if wave 1 and wave 2 are down here, okay, which is likely the case, This is likely an extension of wave 3, an extended wave 3 rather. And we also, once again, see evidence of a complex complex corrective reaccumulation channel, not necessarily one of those trying, oh, I can't do it, right? Resulting in a head and shoulders pattern like you're seeing with Bitcoin, right? Like the head and shoulders pattern that you see, the bearish reversal pattern is as it is because price tries to make the high, tries again and tries a third time and finally fails and breaks down. This is what you see in Bitcoin, right? If you look at Bitcoin, you see your quintessential head and shoulders pattern forming. If you look at a lot of these altcoins, you don't see that, right? Bitcoin, quintessential head and shoulders pattern, okay? Likely to come back down. In a lot of these altcoins, what you're seeing, whoops. Sorry. What you're seeing is something a lot different where you do have a test of the tops of the range, but a lot of those tests are showing strength. One, because in this case, you're up and to the right, right? Up and to the right again means you're showing strength because there's a lot of buying pressure. As time moves, more buyers step in. So people, for some reason, despite you going up and down in the range, are thinking it's going up in the aggregate. So as time moves on, while it's in this range, they're buying, which makes the channel slant up and to the right. That's bullish. Okay, that's one way of showing strength. Another way of showing strength is that you're coming down, but you're not coming down with too much speed or strength. Okay, your retracements to the downside are taking some time. Okay, you're not seeing too many doji candles. Yeah, you're getting a doji candle here at the real top, but in a real distribution, you're seeing a lot of doji candles at the top resistance here, and here we don't see that. And again, showing major strength on the way up. Showing major strength on the way up with minimal retracements. So again, I think that Cardano is a good example of one of those assets that are likely to hit the next significant resistance, which on this chart is, let's see. Let me just clean this up real quick. On this chart, the next significant resistance, I would say, is around 75 cents. Okay? It's around 75 cents because I'm essentially breaking out of this W pattern, right? Bitcoin did the same exact thing. And the height of this W is going to be my technical target for the move to the upside, and that's going to hit the bottom of this distribution right here. Okay, so I'm essentially targeting that. If I'm a Cardano trader, I'm targeting the bottom of this distribution, which should be about 75 cents thereabouts. Okay, so that's what I'm seeing in Cardano. Let's do one more. And I know this is a long video, but whatever. If you're getting value, definitely like, share, and subscribe. And let me know what you think. Let's do Dogecoin. Do we have a good chart? Okay, yeah, this is a decent chart. So Dogecoin, another example of really you're not distributing and it doesn't look like a distribution. Again, you know, and I didn't mention this before, but your momentum indicator is looking bullish. Okay, it's cross bullish and it's open, meaning it's looking for further action. Obviously, those aren't tried and true. Like just because it's down here and it's cross bullish doesn't mean it's not going to roll over on you. If you look at Bitcoin's momentum indicator, it's cross bullish, but it looks a little different. And again, it's subtle. It's subtle. If you look at this and you look at what Cardano's momentum indicator on the daily time frame looks like, and you look at what Dogecoins looks like, there's a subtle difference. But again, I don't know that I would necessarily base my trading results, or sorry, my trading theory on indicators at this point. I'm going to do something a little more thorough so I can make a more serious decision as to whether or not I should be exposed to the market, given that Bitcoin's likely to distribute in the coming days. And so yeah, that's why I'm not harping so much on the indicators. Although indicators are helpful, I think you need to be a little more thorough when it comes to something like this, because again, the differences are subtle, and you need more subtle means to diagnose what's likely happening. Again, on the 4-hourly time frame, what we can see, Dogecoin, just like most other altcoins, has experienced in the past 40 days plus a move up. Now, Dogecoin, you can see you came up and you started going sideways and sideways and sideways. Okay, this one's a little easier, and I'm going to tell you why. So, why is this likely moving up and not coming down? The main reason for me is I'm just counting my Elliott waves, and I know that if this is a strong wave up, right, 5 waves up, I know that 3 waves down has to end here. Why? Because this is the first iteration of 5 waves up, so that must be wave 1. This must be wave 2. Wave 1 and wave 2 take around the same amount of time. You can see that these waves took the same amount of time. You can see that this retracement goes about 382 to 618 Fibonacci retracements of this wave. So I know wave 2's finished over here. Okay? So I know that this can't be a wave 2 if this is a tried and true 5 wave move. And it does look to me that like this is a tried and true 5 wave move. I mean, you can go on a smaller time frame and examine it, but to me, you know, looking at these things day in and day out, like that jumps out at me. I don't have that many questions about whether this is a legitimate wave. Okay, so what is all of this? When I look at this, first thing I want to do is draw my support and resistance. Okay, I see a megaphone pattern, what most pattern traders would call. Okay, this is bullish to me. One, because you're going up and to the right, meaning as time goes on, although you're going up and down in a channel, buyers are stepping in, forcing the bottom, the support level, up and to the right. Okay, that's really bullish. The second reason it's bullish is because, for me, this is a consolidation whereby every single time the price comes down to support, buyers step in very quickly. You can see, right, even on the 4-hourly time frame, strong doji candles here. Or sorry, not doji candles, hammer candles signifying strong buying pressure at the bottom. Okay, that corroborates our read of this being an up and to the right channel, showing support, showing strength rather, right? Every time you come to the bottom of this channel, buyers step in massively. So to me, the nature of the candles, the nature of the price action is telling me that this is looking to break up and out. Okay, and so if I'm a buyer of Dogecoin, I would likely, and I'm not, but if I were, I would likely look at this as my impulse that eventually takes me up and out of this channel right here. And so I would hide behind the phi ratio of that and just buy, not expecting any retracement beyond the phi ratio. I would expect this to go up, maybe as it hits its head here, retrace a little bit, and then continue to go up, break this channel, and then hit the next major resistance, which on the higher time frame, on the daily time frame, is all the way up here, around 16 cents, right? Around this mauve rectangle right here, around 16 cents. So guys, that's just my thorough analysis on altcoins. Obviously, I only looked at 2 altcoins, Cardano and Dogecoin, and you know, you could get more intricate, but generally speaking, what we did with the total 2 chart, with the altcoin chart, is essentially what I see most altcoins doing. Most, again, You can't blanket any analysis for every asset. You have to take it case by case. But most altcoins are likely to give us a strong move to the upside in the coming days as a result, while Bitcoin continues to consolidate in and around that range of distribution. Guys, if you got value, definitely like, share, and subscribe. That's all I have. Hope this was helpful. Hope this was useful. And I will see you next time. Take care. Bye.